So guys, have you ever wondered whether Aviva be a better investment for your stock portfolio than what's in your portfolio today? Analysts have got a very strong opinion on Aviva, and they've just released some massive news. That news is around their dividend, final dividend for the financial year. So does investing in Aviva make sliced bread look like a bad idea? Is investing in Aviva the next boohoo? Or in fact, should Aviva go to the top of your investing buy list for 2023? Let's find out. On with the show. So the big news on the dividend for Aviva is they've declared their final dividend. Now here is information from Simply Wall Street. You can see it's a final dividend of 20 pence for the financial year ending December 22. What that means is it's actually a total dividend for the year of around about 30p. Now, if you compare that to their share price of just over £4, that's a very good dividend yield. In fact, that is a dividend yield of 7.5%, which is absolutely outstanding. If we have a look at their dividend history, which is the lighter blue line here, you can see the trend was upwards until COVID. There's a drop and it's continued to go upwards again. So this is a company that has a track record in most years of increasing their dividend. They've also started to do share buybacks as well. Now, if you have a look at the Aviva share price for the last 12 months, and we can see since the kind of consolidation and return of capital last May, about a year ago, they've kind of erred around this sort of £4 to £4.50 range. A couple of times they've gone up to just over £4.50, and a couple of times they've gone down to just below £4. So the important thing for us to note is that this is an insurance company. Why is that important? It's because we can assess them by their book value. The book value is effectively their net asset value, assets minus their liabilities, and then we can compare the price to their book value per share, and that will tell us if the company, as an indicator, is potentially over or undervalued. And we can see on the screen the book value per share ratio for Aviva. And the book value per share ratio of 1 means that the company's market price is the same as its book value per share. If we extend this view to 5 years, we can see that pre-COVID, they were around 1. There was a big drop off, and I managed to buy some in this area. Been increasing. It's a really good opportunity last summer by the looks of it. And you can see that most of the time it's actually below 1, and today it's 0.93 because the book value per share is around about £4, £44.50. The market price is £4.15. So 0.93, the company is undervalued in the market compared to its net asset value. We've got a company, a great story emerging here, great dividend yield, plans to continue to grow the dividend in the future, and undervalued in terms of book value per share. There could be some capital appreciation. This easily could be a £5 stock fairly quickly. But before we get too excited, let's do a health check on Simply Wall Street. The financial health looks okay. The debt since 2020, which was 10 billion, has been coming down below 7 billion. Although do note the equity has dropped as well. That debt to equity ratio is just over 50%. That's pretty decent. Compare that to legal and general, is much superior. Balance sheet there looks okay. Let's just have a look at the valuation via some other metrics. The market cap is around about £11.5 billion. Been a little dip off on the earnings, which is the lighter blue line here, but it is projected next year to be £1.5 billion and just over £1.5 billion for subsequent years. That forward PE ratio is looking quite attractive and certainly in single digits. Quite a nice comparison tool here on Simply Wall Street. You can see the price to book value for other competitor companies or similar companies. See, Aviva is 0.9, as we said, rounded. The industry average is 1.3. Direct Line just struggled recently. They've actually cut the dividend. They're trading at the same 0.9. Aviva should not be trading at the same multiple as Direct Line. You can see here Legal and General, also a company I really like. And I should say for disclosure, I do hold Legal and General and Aviva in my portfolio, and we'll come on to that in a moment. That's got a higher valuation on it. And here is, for full disclosure, my holding in Aviva, about 3% of my portfolio. And you can see the total return so far is around about 50%. And that was bought in 2020. So very happy with it, the holding, very happy with the dividend yield. I'm considering actually whether to add to that position given what we've just seen today. And if you comment below on your thoughts on Aviva dividend, I will do my best to reply to your comment. So guys, before you go, check out this video over here. This video is a company I think can return over 10% here to your portfolio over a long period of time. So click on this link, check it out. I'll see you there. This video, it could be the one.